House prices in Australia are about to boom from this month, September 2025. And I'm especially talking about everyday homes priced between like $700,000 to about $1 million. And in this next phase of the property cycle, many of those properties will jump by over $100,000. Now, that might sound a little crazy, but it's actually a very conservative estimate. You see, my clients who bought property just 12 months ago have already seen those kinds of gains. Every single one of them is sitting on a six-figure equity growth in just 12 months, and many of them have been calling me daily since last week asking how can they buy again. Now, I've been investing for 23 years. I've been helping others invest for 9 years, and I can tell you, moments like this, they don't come around very often. But when they do, they separate those who build wealth from those who miss the boat. So today, I'm going to walk you through why certain areas around Australia are about to take off, regardless of how much prices have risen already, and what that could mean for you. Now, let's address the elephant in the room. How do I know house prices are actually about to boom? Well, let's have a look at the early indicators and what they're really telling us. Number one, loan pre-approvals are surging. You see, many people still assume that interest rates, well, they haven't really fallen that much, right? I mean, there've only been 3 rate cuts and we had way more rate hikes before that. So there can't be that much of an increase in the number of people buying, right? Well, after the first 2 rate cuts, mortgage brokers and banks reported a huge surge in loan pre-approvals, up nearly 12%, and that was just after the first 2 cuts. Now we've had a 3rd rate cut. That increase in pre-approvals is expected to be as high as 19% compared to this time last year. That's real buying pressure building up behind the scenes. You see, when pre-approvals jump by 19%, these people, they're not getting pre-approvals because they're bored and they've got nothing else to do, right? They're getting pre-approvals because they're planning on jumping into the property market. And when you have a nearly 1 in 5 increase in buyers, that's thousands of extra buyers planning to enter the property market. But do we have thousands of extra properties available to buy? Not even close, right? So that demand, it's got nowhere else to go except into higher prices. That's why I always track what's happening with pre-approvals, because an increase there, that's often the first sign of price growth before it hits headlines. Now, if you're already pre-approved, be ready to act fast, but do your due diligence. Speed without due diligence can kill you. But with the way prices are taking off, you're too slow to do your research. Odds are you'll miss out on some significant growth. And look, this isn't just theory. We're actually seeing this demand play out in real time, especially on Saturdays across the country. Auction clearance rates are rising week by week. Take last week, for example. Across the capital, 2,251 homes went under the hammer. That's a 9% jump from the week before. According to Cotality, it's the busiest week of auctions we've seen since early June, when nearly 3,000 homes were listed in a single week. Now, what does this actually mean? Well, when auction volumes rise and clearance rates stay strong, it signals deep buyer demand. Now, most sellers, they only bring homes to auction when they're confident they'll sell. And we're seeing buyers turn up in bigger and bigger numbers, pushing up prices for properties well above their reserve. This is actually one of the clearest indicators that prices are about to lift. If you look at the data of the last few decades, auction clearance rates rising, it has been one of the most accurate indicators that prices will rise shortly after. So if you're watching auctions in your target suburb and you're seeing activity picking up, don't ignore it. That momentum is a sign that prices are already shifting upwards. And if you're not seeing auction activity pick up in a target suburb, and again, assuming it's a suburb where lots of properties are actually taken to auction, that's probably a good sign that you need to pick a different target suburb. And look, it gets even more interesting because it's not just the professionals who think prices are going to rise, it's actually now everyday Australians. According to Westpac's latest consumer sentiment survey, more Aussies now believe house prices are going to rise than fall. And that number is growing. You see, while as investors, we want to be rational, we want to focus on the best price and the return we get when it comes to buying a property, in actual fact, property, more often than not, it's actually an emotional transaction. When people believe prices are rising or about to rise, they start buying out of FOMO. They don't want to miss out. And that then causes prices to rise even faster. It's a self-fulfilling momentum loop. And that's exactly what drives early stage booms. So take action before the herd does. You're smart for listening to information like this. Most people, they have no idea what's about to happen to the property market. And when they do, when that sentiment flips, the market moves quickly. It's the buyers who act first, the buyers who act as soon as possible. They're the ones who benefit from this upswing, and I would love that to be you. And now, just as this wave of buyers is forming, the government's putting further fuel on the fire. They have just announced the first home buyer incentives. They're bringing them forwards to the 1st of October. I spoke about this in an earlier episode. And that's giving thousands of buyers, in fact, tens of thousands of buyers, more borrowing power, especially in the price points ranging from sort of $600,000 to about $950,000. Now, this will directly increase demand in the most competitive part of the market. And when you add more buyers with more money into a market where there already are not enough homes, prices spike hard. It's not theory, it's already happening. So if you're targeting the same price range as first home buyers, act as quickly as you can. And now, to be specific, when I'm talking about first home buyer budgets, we're generally saying a budget of under $1 million or so. So if that's your budget, you want to move as fast as you can, but again, don't buy blindly. You need speed with due diligence. One without the other will cost you. Now, by the way, before we move on, if you're even thinking about buying an investment property in Australia right now, don't do it without our free checklist. It covers all the key things you need to look at before making a move so you can buy a property quickly and still do your due diligence. You can get it totally for free in the description below. Now, some of you might be thinking, sure, Nero, things are heating up now, but isn't it just a short-term bounce? Well, the truth is, what's happening runs much deeper. Number one, properties for sale or listings are dropping. National data shows a significant fall in the number of properties being listed on the market at a time when demand is rising. So what does that mean? That means that the pool of available homes is actually shrinking. So when you combine fewer listings with more buyers, it creates a bidding war and upwards pressure on prices. This supply crunch, it's one of the key drivers of price growth, and it's happening across multiple key locations around the country. So if you're thinking about waiting for more stock or better options, you may be waiting forever. Prices are likely to rise before more listings, more properties for sale appear. And even if you're thinking, well, they'll just build more houses. I'm sorry, the data says otherwise. We're not building enough homes. The latest ABS data, or data from the Australian Bureau of Statistics, shows a sharp fall in building approvals. Even more worrying, Australia is now expected to miss the federal government's target of 1.2 million new homes in 5 years. This means we're not just short now, we're locking in long-term structural undersupply. Even if demand stayed flat, and like I said, it's not, this shortage alone would push prices steadily up over the next 3 to 5 years. So if you're looking to buy an investment property, make sure you're focusing on buying established, good quality properties, properties that are already built in undersupplied areas. As supply drops and demand rises, capital growth becomes all but guaranteed. And finally, the factor that almost everyone is forgetting to account for right now. Immigration is roaring back. Immigration is actually surging again. Australia's population is growing fast, and most new arrivals, they're settling in either the capital cities or some of the major regional locations around the country, exactly where stock is tightest, exactly where there's a massive undersupply already and demand is rising. So what does that mean? It means more people, more households, more demand. But when you combine that with fewer listings and reduced building, and you've got the perfect storm for price growth. This is especially true for rentals, so rents will rise, and at those first home buyer price points, which, as I said, essentially, with the exception of Sydney, is under $1 million, and at those price points, you're likely to see strong rental growth, which, with further rate cuts expected, that will improve your cash flow, as well as strong capital growth. So it's the perfect time to be buying property as an investor, because you can get the best of both worlds, strong capital growth and improving cash flow. So look at areas with high rental demand and strong infrastructure. These will absorb population growth the fastest, and price growth will follow. So if you're watching this and wondering, how do you take advantage of the boom without having to do all the heavy lifting yourself? We can help. My team specializes in helping clients invest passively without the stress. If that's you, book a free call using the link below, and let's put a plan together before the market really takes off. Now, it doesn't matter if the market's rising if you buy in the wrong place though, because not every suburb is going to perform equally. That's why in this next video, I'll walk you through the best properties to buy before the end of 2025. So make sure you watch that now so you know exactly where to put your money before prices really take off.